You're listening to the Travis Makes Money podcast presented by GoHighLevel.com. For a free 30-day trial of the best all-in-one digital marketing software tool on the planet, just go to GoHighLevel.com/Travis. What's going on, money makers? Welcome back to the Travis Makes Money podcast, where it's our mission to help you make more money. If you're new to the show, we release brand new conversations with unconventional money makers every single day of the week. You might be listening to this on another feed or something like that. So if you have not yet, be sure to go to your podcast app of choice right now. Follow the show so you never miss an opportunity to make more money. And while you're there, if you want to, just leave us a quick rating and review. I will be eternally grateful, as it really does help us out tremendously. Now, today on the show, we're going to be talking about managing your finances and where to put your cash with my good friend, Dana Cornell. Dana is a former executive director over at Morgan Stanley, Forbes-recognized financial advisor. He managed $1.4 billion previously, just a little bit of money, but he walked away from that because he thought the model was broken. And now he basically has built up Cornell Capital Holdings and is advising another $1 billion. So he knows a little bit about how to make money and how to manage that money. So Dana, what's up, man? Welcome to the show.
Going on, my friend? Love the new direction of the show. Thanks for having me, bud.
Hey, of course, man. Of course. Let's start with something simple. Tell me how you made your first dollar and tell me how you made your most recent dollar.
Great question. Uh, First dollar, I started out digging ditches for my dad's excavation company. If I wanted to get to my actual first dollar made, my professional
Yes.
career, deferred law school, that bill was on me. My dad taught me hard work and a work ethic. So I literally started out knocking on doors because we didn't come from a family of wealth and I didn't have a natural network of wealth. So I went from knocking on doors and quickly figuring out how to find a need and add value to that need and solve a problem for people. And that grew to $1 billion at Morgan Stanley before I switched gears and refined the practice here. So,
And so now your most recent dollar.
yeah, most recent dollar now, I am helping mostly, we've niched down even more since we talked last, primarily business owners, and primarily on exit planning, whether they're
Oh,
moving
really?
towards an exit and helping defer and minimize the tax hit on an exit, and then how to replace your earned income now that you've lost your income generating machine being your business and replace that with passive income. We do that on
Good.
a financial planning basis.
Awesome. Awesome. And then you guys basically are also investing in buying pieces of companies now, correct?
We are.
Yeah.
Yep,
So this is where I would assume that cash flow piece comes in.
it does. Yeah, I mean, you find, at Morgan Stanley days, I worked with, at the end of those days, we were in a higher net worth planning division, and you quickly find families 50 million liquid net worth or more, which is where that division is geared towards. They're not diversifying their assets by traditional stocks and bonds. And you see a lot of people, as their wealth grows, you can save your way to a certain level of wealth. But when exit, liquidity events start coming, real wealth doesn't diversify by stocks and bonds. They diversify by income streams and different asset classes. So
Hmm.
real estate, private equity, meaning small business ownership in various shapes and sizes, things like that, private debt becoming the bank for certain entities. So that's where we're placing assets now, and that's what creates dollars on top of dollars and true passive income.
Let's talk about the small business ownership thing, because there's a lot of people who listen to this who, maybe they have a little bit of money saved up. They have their salary job that they don't necessarily hate, but they don't necessarily love either. It's just like, it's a job, it pays the bills.
Yeah.
But if I ever want to get out of doing this, and if I ever want to retire early, I know have to go down some sort of path of a side hustle or small business ownership or, entrepreneurship in general. What have you found in that world that would be able to help somebody listening to be able to potentially go run their own small business? Like, what are some of the misconceptions, I guess, if you will, to when it comes into the actual purchasing of a small business that's already cash flowing? Because this is a way
Yeah.
that's actually really attainable for a lot of people. They just don't realize that it's attainable.
Highly attainable, especially if you can jump the line of knowledge and get and buy the skill set, right? So we actually teach this, my partner, who Kyle Mellion and I, two sides of the house. So we're teaching if you need to essentially buy a business to replace or generate an income stream, you need to know what type of business, what is the right buy box,
Hmm.
right? So we talk a lot about what is the right buy box. You're not buying too small and buying yourself another job, but how do you buy yourself an entity that can grow and scale. And then once you've found it and acquired it in the right, most efficient way, how do you then scale that to remove yourself as the operator and actually truly be a business owner?
Yeah,
Right.
people look at that and they get this idea that like, okay, well, I'm brand new to this. Let me just dip my toe in the water. So I'm going to buy this business that last year it did $180,000 in revenue and they did $40,000 in profit. And it's like whatever they service pools, their pool
Yep.
cleaning route
Yep.
or something like that. And they look at that and they go like, okay, well, that's something maybe I could sink my teeth into. It's a big risk for me, but still, I think I could make this happen. I could piece it together, when in reality it's actually more risky to buy that business than it is to buy the one that did 1 million in revenue last year on 30% profit, because like to get to that revenue stream they had to actually have systems in place. They actually had to have employees who are responsible for doing parts of the business that the owner is not doing anymore. The owner is actually functioning as a real owner. And then what's cool about that is the bank will give you debt on that business. Whereas if it's something smaller that doesn't cash flow anything, that doesn't have any real assets, it's not a systematized process, the bank's not, they're not going to do anything on that. You're going to have to come out of pocket for all of that acquisition, right?
100%, man. The biggest success stories we see are the people that follow the guidelines of buying something big enough, and it's scary, right? I mean, it's initially your initial thought is what you just said. It sounds like you're taking on a bigger task, when in reality, everybody that ends up going wrong in that process is buying too small,
Hmm.
right? They're just buying
Where have
another
you
job
where have you
more
seen
head.
that threshold?
Usually it's minimum $1 million gross revenue with
Okay.
20 to 30% net profit margin. And you really have to figure out by backing into the debt service, and you got to have enough room to one, pay yourself, and then invest back into the business. So I'd say that's bare minimums. That's
Yeah.
where you need to
So
be.
so you said a couple of terms there that maybe somebody listening is not familiar with. So what do you mean by backing into the debt service? What does that mean?
So you need to finance that. So as you said, the beautiful thing about buying a small business, the Small Business Administration will give you an SBA loan where you have to put down a reasonable minimal down payment. They'll finance it based on the revenues of the business, but that's going to cost, right? Just like your house mortgage, right? You have principal and interest that you owe on that payment. So you need to calculate that for however many million you're going to finance and make sure, one, the revenues of the business can cover that debt and there's still cash flow left over. We see that all the time where people buy too small and get pinched,
Yeah.
where the debt
Yeah.
consumes all the cash flow.
So basically, somebody's looking at it like, man, I can get into this business. It generated, again, 200,000 last year, and it made 30 grand profit or something like that. I can get into this business, and maybe I can get some debt for it. But basically, their entire cash flow, the 30,000 in cash flow, is being eaten by the debt payments that they have to make every month. Like there's their quote
Exactly.
unquote
Yep.
mortgage payment on the business is being eaten up by all of the cash flow is gone. So there's no extra money to invest in, uh, you know, uh, a new software program that's going to make the company more efficient, or updating the website because this one was done in 2003 and never updated and doesn't list on Google. Like these kind of small tweaks that you can make, there's no money left over to be able to invest into these things. So if you can go buy one of these ones that has 300 grand net profit, and your debt service is 180 a year instead of the full 300 grand, now you have 120 of margin to be able to play with, where you can be like, okay, now we can take this money, we can invest into a little bit of marketing to get more feet, to get more foot traffic in the door. We can hire an additional, virtual assistant overseas to help us like manage this data that was all over the place or whatever. You can have extra money to invest into the business from the business. This is
That's
not
it.
additional money out of your pocket. This is not money that you have to play with. It's your personal money. This is money that the business is already generating because it's a real business that actually cash flows money without the owner being present inside of the day-to-day operations of the business.
Exactly it. So we have a saying, the asset pays for the asset at that point, right?
Mm.
So you're reinvesting based off of business proceeds. So let's say, for easy math, let's say it's a business that's generating 500,000, right, of net profit.
Mm-hmm.
And you can grow that. And maybe it takes you 5 years to double that profit by sales, operations, marketing. Well, now you're at 1 million. So now you can take that million and now you flip to my side of the house where you're looking to exit that business. So now you're at 1 million. So now you get a multiple on the sale of that, right? So let's
Mm-hmm.
say on the low side, that million goes for 3 to 5 times, depending on the business, conservatively. So now you've taken something that you probably put 10% down in a small business administration loan,
Mm-hmm.
doubled the net revenue that the business paid for strategically.
Mm-hmm.
Now you're selling that $1 million of revenue for $5 million of revenue. Now
Mm-hmm.
you flip to my side of the house. Now you've got a tax problem, right? You're paying 20% capital gains on that.
Yeah.
So
Yeah.
if we can defer or minimize that tax hit and then replace that $1 million of income or close to it with passive income, and then you go do it again,
Yeah.
right? Just up the game, up the game, up the game, right? That's how you build your way to true wealth.
Yeah, man, I love this concept because we entrepreneurship is very romanticized anymore, and most people think that, well, I've never ran a business before. I got to start my own thing. And to be fair, if you have never done anything in business before, buying a business can be really scary, and it is still extremely risky, right? Like if you're not a business operator, then maybe you don't know some of these other things that we're talking about. Like you can invest in software to make the business more efficient, and then you can increase the profit margin by outsourcing your talent overseas instead of having them be stateside, and you can increase profit by cutting expenses here. Like if those are things that are like, I have no idea what that even means. I don't even know what a P&L looks like or what it stands for, let alone how to look over one and see how it can save money or make more money. Then should somebody like that start maybe with like, hey, let's start a service-based agency locally just to like learn the basic principles? Or do you think that it's something that they could do jumping into an acquisition?
So I've built businesses from the ground up and I've bought them, and I would defer to buying them every time. And if you're buying to the right size, you can afford to hire the right team of advisors to surround yourself with those skill sets.
Yeah.
Right. You can
Yeah.
learn as you're implementing along the way if you've got the right team supporting you. I would defer to that every time. You just need to get in the right rooms and learn the right strategies.
The most difficult part of a business is going from 0 to 1.
Sure
That
is.
first level of just like, we have an idea. Okay, everybody's got ideas, but the idea doesn't mean anything. It's the execution against the idea that's what is the most valuable piece of it. So if you have the idea, well, now you got to go find people, and those people have to be willing to take their wallet out and give you money to help them solve this problem, whatever the problem is. And then you have to continue to adjust that offer structure, adjust that price point, adjust that customer avatar. Like we're talking a year, 2 years, 3 years sometimes of work just to get to a base level of like what we would call product market fit, to be able to be in a
Exactly.
position to scale that business to another level. The amazing thing about buying a business that's already cash flowing is that you don't have to worry about any of that first step. They've already done all that hard work. They've already proven the model. They have an existing customer base. If it's a brick and mortar, they already have their kind of like floor level of foot traffic that they're getting in. They're an established business. They've been around for 7 years in this area. They get this business, they get this foot traffic, they get this Google traffic, they get a certain number of phone calls every single month just from being there. You're skipping like so many layers of difficulty and obstacles by just jumping into a business that's already been proven to be successful. And like you said, if you're buying it too small, a lot of times what it is you're just buying a job. You're if you buy that pool route, it probably means that person who owned that pool route is the one that's still cleaning all the pools. And it's like, I don't know about you, but if I'm getting an entrepreneurship, it's not to clean pools. It's to be able to like make money while I'm on vacation with my family.
Right.
And like to get it to that point, like you may as well just start it from scratch at that point. May as well just start your own pool route.
For
Like
sure.
I mean, it's going to be a tall order to be able to get it to that point. But if you buy one of these other businesses that's like already cash flowing real money and the owner is not involved in the day to day completely, and they might opt to be involved in the day to day. It doesn't mean that it's like a bad deal if they're still in the day to day, but can they take a step out of it is the question, and have a team that's already in place. And does that team come along with the sale? Because if it does, you're gonna find yourself in a much like easier position to be able to learn some of these, so to be able to go through this learning curve without completely losing your ass in your entire investment.
For sure. It's the evolution, right? If you're buying a business that's got 10 employees versus two, if you lose one employee in a two-person business, you're kind of screwed.
Yeah,
At
yeah,
least a minimum of 10, you can still manage. right?
Yeah.
But you're still working in the business. Hopefully you're working on scaling that business. And then you flip to the other side. If you're someone who already has critical mass of wealth and you don't want to work in the business, you can get the same returns doing it passively because you've got liquid net worth.
Yeah.
So if you're a accredited investor or higher, that's why we combine the investment fund that invests in business like that to give you an 18 to 20% annualized return passively, right?
Why invest in businesses versus something like stocks or bonds, real estate?
Well, we could talk about stocks and bonds. The average investor still makes 4.5% in a stock bond portfolio, and the markets are so irrational. And I think the people that are reaching out to me now, right, because we buy different income streams, we don't buy a stock bond allocation and ride that wave. I think that's the craziest thing in financial planning. And one of the reasons I left the traditional world of that is you invest in stocks and bonds and ride this wave, and they tell you you can pull an income stream off of that allocation, and that's supposed to be diversification and risk management, which is nuts. Like go back to 2008
Hmm.
and ask people, did their income get cut because you essentially are pulling one income stream from that portfolio? Versus if I give you 4 or 5 different income streams, well, if one, like commercial real estate, has a hiccup like it did the last 18 months, you're still pulling consistent income streams from small business, private debt, things like that, which
Yeah.
is a big conversation. But to answer your question, you don't get leverage on the stock market. Yes, it grows and there's dividends, but the fluctuation of that and the lack of consistency in the short term, and that's why a traditional advisor will tell you, oh, it's the long-term horizon. Well, the long-term horizon doesn't always match the individual,
Hmm.
right? We're trying to buy your time back now
Yeah.
with passive income. You don't have an exit strategy. You don't have exponential growth. You can't buy into 10% of your stock and bond allocation. You have to put 100% of your money in instead of a small piece
Hmm.
to get the leverage on top of a business acquisition. So it's
Well,
exponential.
yeah. What I like about businesses too, man, is there's more levers you can pull if things are going poorly. You know what I mean? Like if your portfolio is going poorly, you can do a
Yeah,
grand total of zero things about it.
that's
You know what
right.
I'm saying? Like there's nothing you can do. If you own a laundromat and things are like going poorly, you can examine that business and you can look at the P&L and go, you know what? I think we can get rid of these expenses. These aren't necessary right now. Let's cut that. Let's cut that. Boom. Now we have additional profit. Let's host this thing here next month and get some more customers in the door, and that will increase our
Exactly.
revenue. Like there's so many, just there's different levers that you can pull to make the investment actually work out really well. You have control over what's going on. It's not just like, well, we put the money in and let's hope it goes through the roof. It's like,
That-
okay, well, we can put the money in, but also I'm in the driver's seat here. It's like there's downside to that, obviously, because if it completely goes under, then a lot of that's your fault and your responsibility as well. But you also have the ability to change the outcome of that particular business by getting in the operator chair and asking yourself what you can do to increase the profit in that business. There's more control there to me.
Absolutely. And there's certainly more resources. And you're right, a lot of more levers you can pull. I mean, look at Warren Buffett, what he's done with Berkshire. Essentially, he's buying a portfolio of companies that he can control those levers that you just talked about. And that's why he's one of the most successful investors of all time. He buys it right, and he knows how to grow that business internally.
Yeah.
It's the same thing. And then you get to the exit strategy. No one's offering you a multiple. No one's coming in to say, hey, you're going to retire. I'll give you 3 times your stock and bond portfolio.
Yeah.
I'll give you
Right.
5 times. It's not a thing, right? And then you
Yeah.
go to the advanced planning and you show how do you minimize tax outflow and maximize your resources and lead with passive income. Now the game has changed. Now you're playing the game of money like the ultra elite play the game of money.
Yeah, you can get into some of these deals that with no money out of pocket a lot of times. Like I know we're talking about leverage. It's like, okay, well, if the business is going to cost $1 million, SBA is typically going to ask for what, 10%
Yep.
on the business. So like you got to come up with $100,000. Well, maybe your friend or insert random person that has some extra cash. Like maybe you don't have any cash, but you're a hustler and you got some time and you want to like really put some effort into something to make some money. Well, find somebody that's got a little bit of money and say, I'm going to buy this business, but I need the cash to be able to put down. And then you can like borrow money to put money down or partner with that person. Doesn't have to always be in the form of debt. If you're uncomfortable
Partner
with
with the
getting more
current
debt,
owner.
don't get more debt. Yeah, you get 40% equity ownership in this business for giving me this 100 grand because I don't have the 100 grand. But we'll
Yep.
put the 100 grand in this new LLC. I'll own 60%. You own 40%. You don't have to do anything. I'm going to work this business, with every hour of the day that I have. And then you can get the SBA to give you the other 900 grand to get the business, and then they'll let you pay that 900 grand back over 10 years, and you can cover the debt service with the cash flow in the business, and then you can buy that other investor out if you want to with cash flow from the business. You can pay them back as another loan structure in that business, but you can get into it for having $0 out of your pocket to get into a cash flowing business that's already making money and something that could pay you like tomorrow, to be like the core operator inside of the business. You can do that for no money. Like you can't just invest in the stock market with no money. You know what I mean? Like it just doesn't work.
No one's seller financing you $1 million investment portfolio,
Yeah. Right.
you know?
Right. Yeah.
So
And we haven't even talked about seller financing. You don't even have to go to the SBA sometimes. Sometimes the
exactly.
seller themselves will just be like, hey, I just want to get out of the business. I'll carry the note. So basically, like you just work out a deal with them to give them whatever down payment will suffice, whatever they need. Sometimes, like if they're just in a pinch, it's like, look, I don't even need 10%. I just like I got some credit cards that I opened for the business, like pay off my $48,000 in debt and take over the business and just make the debt payments to me. Pay me a percentage of profits for the next 10 years or whatever, and give me a
Exactly.
balloon at the end if you end up selling or something. Like you can structure the deal however you want to structure the deal. As long as it works out for all parties involved, you can move forward. There's no rules around what you have to do to make it work.
So many ways to creative finance a situation like that.
Yeah.
And that's an opportunity you just don't get in another asset class.
Where do you find these deals, Dana?
All over the place. I mean, you got to get in and you got to go sift through the haystack, right? I mean, once you have your thesis in your buy box, so to speak, you build relationships with business brokers. There's biz buy sell websites. There's other websites like that. We have people go knock on doors in their local area. When you start opening the door to those conversations, it's the biggest wealth transfer. Baby boomers selling their business or wanting to sell their business, but a lot of them, quite honestly, they haven't positioned their business for sale.
Hmm.
So it's an
Yeah.
advantage to the buyer in creative financing, like we just talked, to open up a conversation that creates a unique win-win situation for the business owner who's made his widget for 30 years and is just tired and beat down and doesn't have second generation that wants to take it over. And for the new, young, hungry person that wants to come in and put the work in.
Yeah.
So,
Yeah, I had this lady on the other day. She was self storage. She's buying different self storage, like mom and pop self storage stuff, and she just walked me through her process. She just pulled up Google Maps, like found a rural area outside of a big city, and searched for self storage, and then just went through all of the Google listings with me live on the interview, and then until she found one that didn't have a website, and she was like, "I would target this one right here."
mhm.
Because it's a locally owned mom and pop shop. They don't even have a website associated with their business. Like you in 2025, you think that everybody just has that. It just isn't the case. There's a lot of businesses that were started 20 years ago. They have a strong customer base. They have low churn. They have happy customers. They have happy clients. They have profit. But the owners never set up the business to be able to exit. They're done. They don't want to take another 3 years to work to set it up to be able to exit. They don't have a website. They don't have a web presence. They don't have social media. They're not doing business in 2025 the way that it should be done. And you can buy those businesses, seller financing, and then do the bare minimum things like get a new website, put them on social media, get some content out there, like do some things that will just update the business. And then all of a sudden it's more valuable. Now you can turn around and sell it, and then you get the delta on whatever you owed on the debt, whether it's to the bank or to the seller, and you get to keep whatever was in addition to that.
Beautiful thing, brother.
Yeah, man.
Beautiful.
Dan, I love this conversation, dude. This is one of those things that I wish that just would have been taught to me like a lot sooner. You know,
Same.
like a decade ago, where it just would have been like, oh, I didn't even know that this was possible. I was thinking in terms of like, how do I be a salesperson and make more money? You know what I mean? Rather than like, how do I become an owner and operate a business that's already running, and like, oh, the business will pay my debt. on the business. That's
Yeah.
crazy. You know what I mean? Like this
Yeah.
stuff
It's
is
insane.
this just, I appreciate people like you who are coming out and talking about this thing more, especially with your extensive and super impressive background managing billions of dollars in assets for a company like Morgan Stanley, for you to be like, hey, they're doing it wrong. This is the way that we should be doing it. Man, I appreciate you for doing this, dude. Where can people go to get more from you and what you guys are doing?
Yeah, thanks for having me, man. I mean, so my website, and again, I'm on more on the mature business owner looking to exit. Cornell Capital Holdings, Cornell like the college, Capital Holdings with an S. That's our website. Elite Wealth Club, and you can Google that and find us, for the education component of it. So
Perfect.
those are two pretty good resources, and it's certainly a unique positioning to what traditional wealth management has taught most of us. That's for sure.
Cornell Capital Holdings. Go check out some of the stuff that Dana and his partner Kyle are putting out there. They always got great stuff, putting on events all over the place. If you can get to an event, learn from these guys. They're the best in the business. Dana, thanks for doing this. Everybody else listening, tune in. Remember, money will only solve your money problems, but it's a little bit easier to solve the rest of your problems if you got some money in the bank. So let's solve that problem first here on the Travis Makes Money podcast. Thanks for tuning in. We'll catch you next time. Peace out.